of the program. I would like to be more practical. Yesterday, I had talked about some of the reasons why people fail in trading, both people who are completely naive and people who are even trading themselves. And everything boils down to discipline. And if we can inculcate that nature of discipline, avoid greed, overcome greed, and we are need to be sensitive to risk management, not necessarily wanting to make all the money there is, then we are going to succeed. But for today, I'm going to try as much as possible to be a bit practical. And by so doing, I will want to share my slide just to explain a few things, okay? I don't know if I'm permitted to share something.
You are also ready.
All right, thank you. Okay, so like I said yesterday, I'm not just a forex trader. I'm a financial market trader, and when you're talking about financial market trading, it is quite broad. You're not limited to trading only currency. But since we are very used to forex, I will just stay within forex, and then I will digress a bit. So, but let's look at forex, okay? Primarily, let's look at forex. All right. Now, when you're talking about forex, you are simply talking about trading of currencies. And I did establish yesterday that if you're going to learn how to trade the currency pairs, that is the forex itself, you need to be acquainted with the fundamental knowledge of the entire market space. By that I mean you need to follow up what certain global economies, their government is saying at the time. What is Americans' reaction to this or to this issue in this part of in China? What is going on within the World Trade Center? What are the different policies that have been established? How does that affect your own import-export duty? How does that affect interest rate, inflation, and the rest of it? You need to pay attention because that is what drives actually the fundamental part of the currency trading drives the forex market. And then what established it is the technical part of it. So you need to be acquainted with the fundamentals. And I did say, however, that if you don't want to bulk your head with too much of information and too much of lookouts, then you need to stay within an instrument that you don't need any fundamental information to be able to trade it. And that's why I talked about trading the synthetic indices that is not tied or related or linked with any government policy as the case may be. But let's just work with forex for now, and then I'll digress a bit. Now, when you're trading forex, the first thing you need to start with, like I said, you need to have an account, and then you open the account with either with a broker that is regulated in your country and the country where it's founded. And then after that, you've done your documentation, you validate your documentation, and then you want to start trading. Don't forget that it's important to take note of the spread. Okay? It's important to take note of the spread, the offer, because spread is also very important. If the spread is very high, it will be difficult for you. However, it doesn't mean that all brokers give the same kind of spread. Okay, some of them have different spread arrangement. But one thing is sacrosanct. If you're trading a less liquid currency pair, it means the spread is going to be very high. And I'm going to explain practically what I'm talking about. So for example, let's start with from the very beginning. So after you've opened an account with a broker, and then maybe a broker, like I said, that is regulated, and you've checked that their spread is fine enough, is good enough. Another thing you need to learn is that, like I said yesterday, you don't need to trade all the assets, all the currency pairs they wish. For the sake of discipline and for the sake of mastery, you need to choose a few assets, a few currency pairs now that you want to stay, you want to master, you want to trade. But then there are a lot of currency pairs. And these currency pairs are divided into different categories or classes. We have the major currency pairs, and that's why I want to share my screen. So just for us to see it, and then, okay. Share screen. Okay, fine. At least I can share this. All right. Okay, don't know if you can see my screen now. All right. Okay, fine. So this is actually an MT4 platform, and this is actually for trading of currency. This particular platform is actually for the trading of currency. Now I want to say this, and like I said yesterday, you will hear people say forex trading is simply the buying and selling of currencies. Okay, and like I said yesterday, truly, in the real sense of it, you are not buying or selling no currency. You're only speculating the differences in prices. And if your speculation is right, you make money. To make it clearer for you, or to make it easier for you to understand, there are times you open an account, a dollar account, okay? You have a dollar account, you fund it with a dollar account. And when you're trading, you're even trading Australian dollar against Japanese yen, for example. You see that you're actually buying Australian dollar in exchange for Japanese yen. But at the end of the day, when you make the money, what you see is dollar. Okay. So in the real sense, you are not actually buying Japanese yen, having used Australian dollar. No, you're only speculating the differences in the prices, in the price shift of those currency pairs. And then when you get your speculation right, you are rewarded with dollar, depending on what you funded your account with. There are people that have Naira accounts, but they trade Euro USD. All right. So they are actually buying Euro in exchange for dollars. Get the point? But at the end of the day, they get rewarded with Naira. So which means they are literally, they are not, exchanging. They are not buying Euro. It's just done verbally for the sake of language. That's what it is. But like I said, it's just about price speculation. So let me come here. If you look at my screen, you will see a lot of very funny stuff here. Now there are two participants in the Forex market. We have the buyers and the sellers. And when it comes to the charts environment, they are represented by two colors, the red colors and the green colors. By default, the white color and the black colors. There are some people that decide to use blue and white or blue and black. The color is immaterial. What is important is you need to know that we have two participants, the buyers and the sellers. And the buyers are usually represented by the green candles, and the sellers are represented by or with the red candles. Now, there are important terms you need to know when you come into trading. We call it the Forex lingo. There are a lot of them. Now, when market is buying, or let's say when an asset is appreciating, that is going upwards, it is usually represented with green candle going upwards. We call it bullish trend or a bullish market. So the green candles are called bullish candles, while the red candles, like you see on the screen, are called the bearish candle. You know, the idea is from bulls and bears. When a bull, the animal, is fighting, it's fighting upwards. It kicks from the bottom to the top. All right, it's fighting. The horns are always digging from bottom to the top. When a bear is fighting, it pushes his horn to the downside. That's his form of attack. And so that is how it is represented. But that is not the most important thing. Knowing these colors is not very important. The most important thing is to know where the market will be going next. Because the idea generally in all life sphere, anybody that can predict the future is going to be richer. So the Forex market is about speculating the future, speculating where price is going next, in the next 1 hour, in the next 2 hours, in the next 3-4 hours, in the next 1 week, in the next 1 year. So if your speculation is right and you put money in favor of where your speculation decision is based, you will make money. But let me say this very quickly. There are a lot of indices, there are a lot of information you need to know so that you'll be able to do your speculation right. We call these things technical analysis or technical information or price action or the use of indicator, whatever you can use that can help you predict where price is going next. or that can help you. Let me use the word speculate. Let me know the word predict. That can help you speculate where price is going next. That's the core of trading. And there are a lot of facility you can use. When I talk about facility, I'm talking about software facility you can use. Okay, something like there are a lot of market patterns, something that helps you to determine where market is going, something that will help you to determine from the chart the next price of Bitcoin, the next price of Ethereum, the next price of Nigerian Naira against dollar, and the rest of it. All right. So having said that, information on how you can do the speculation is important, and these informations are available. Now, if you look at my left side of the screen, you will notice that we have symbols. You have two, currency pairs. Now, currencies are quoted in pairs. You will see the first one is Euro USD CHF, USD CHF. The USD represents the United States dollars. The first two letters usually represent the country or the nation. And then the last one represents the currency. So we have US dollars and we have CHF. The CH is for Swiss francs. Is for Swiss francs. And then we have the next one, Euro USD. We have the next one, USD JPY, just like that. We have XAU USD. The XAU is gold. Gold, XAU USD. We have CAD JPY, that is Canadian dollar, and Japanese yen, just like that. Now, however, we have 8 major currency pairs. 8 major currency pairs. And why are they called 8 major currency pairs? Because they are highly liquid. They are what? They are highly liquid. And when we talk about liquidity, what we are talking about is that liquidity is used to describe the level of activity in the financial market. Now, these 8 major currency pairs are often, they are regular players. They are used by very recognized global economies. Talk of the United States dollars, the EU, the euro. Talk about the Great British pound. We talk about the Japanese yen. We talk about the Australian dollar. We talk about the New Zealand dollar. 8 of them, and then the Canadian dollar and the rest of it. Somebody may want to ask, what about Nigerian Naira? Nigerian Naira is classified as an exotic, asset or an exotic currency. It is not liquid. It really plays in the forex market and all of that. Although it's a participant, actually there are about 180 currencies recognized by the United Nations that you can find them in this currency market. So we have 8 major currency pairs. Okay, we have other ones we call minor currency. Okay, for example, we have a lot of other ones, the ones that don't really play out in the financial markets, as in they are not very much traded. They don't really trade those ones. We can call them exotic pairs as well. You begin to talk about things like the Nigerian Naira is there. We talk about the South African rand. You talk about the Indian rupee and the rest of them. There are a lot of them. Okay. Now, these other currencies are called exotic currencies. And let me say this: when you trade exotic currencies, what happens with exotic pairs is that the spread given by the broker is usually very high. Why did I say that? Because they are rarely traded. Okay. Now, we talked about spread. I talked about spread from the beginning, and I said, when you are choosing a broker, choose broker that makes sure that their spread is not very wide. Why did I even mention that? Who is a broker? A broker is like a forex service provider, the middleman that allows you to participate in the forex market. And so what that means is that when you fund your account with a broker and you place a trade, what they do is that they will take your order and then they will buy a position for you, okay, from the forex market, from the forex market. But take note that since you don't have the power or what we call the volume to participate directly, what they do is that they will buy some of this order. And then what you do is that you are now trading either against them or just taking a part of the entire order they bought. That's why I mentioned yesterday that it is important to know the kind of broker you are trading with. We have two types of broker, basically three: the A book broker, the B book, and the hybrid. The A book broker are those brokers, you can go and do more findings on that. The A book broker are brokers that when you place an order, they pass that your order directly to flow in the forex market. The B book broker are brokers that trade against you. What happens? How do you become a B book trader? For example, if you lack knowledge, you don't want to get trained, and every time you keep blowing account, you keep losing money. What they do is that they know that this particular client of theirs will always lose money. In fact, there is a phrase that goes like this, that 90% of traders will lose 90% of their money in 90 days. So they know that this one will always lose money. This one will always blow accounts, will always lose money. So the next time you fund your account and you want to place an order, they will not push that your order to participate in the general global market. What they do is that they will make sure you are trading against them. You know why? They know you will certainly lose the money. So those ones are called B book brokers. Then we have the hybrid. Hybrid are people that have those two kind of system. All right. I may want to talk about that much later. So talking about the chart now. Now it is important to know that when you are trading, okay, when you're trading, you need to understand why you are buying, or before you trade, you need to establish reasons why you're buying or selling. Now let me come back to the currency pairs. We have major pairs, and when we say major pairs, okay, or major crosses, are those crosses that there is actually a US dollar inside of it. US dollar against CHF, US dollar EUD. You know, all those, anything that has US dollar as part of the pair is regarded as a major cross. Then we have minor crosses. Minor crosses are crosses where the dollar does not come into play at all. For example, if you have Euro Great British Pound, it's a minor cross. If you have Euro JPY, that is, there is no dollar in that cross. Those are minor crosses. Then we have mixed crosses. Those ones that mix with exotic pairs, and all of that. Now, major crosses, when I mean major crosses, are anything that you will see US dollar. The spread are usually, smaller. Now, what is spread? Spread is the difference between the ask price and the bid price. Now, look at what you have here. You have symbol. Let me try to circle so that you can follow what I'm talking about. Now, look at this point. Let me talk about this point. Sorry about that. Please stay with me. Let's talk about this, because this is also important. Although when you start trading, you will not really be looking at this. So look at that. So we have bid and we have ask. The bid price is usually the smaller one, or the smaller in value, while the ask price is usually the bigger one. Now, what's the difference between the bid? What is the bid? What is the ask price? A lot of people don't know. When you are trading, now also look at this currency. Look at this one. Now, I'm also going to do something so that it will be easier for you. Now, look at USD. It's on the whiteboard. I'm trying to write USD. Since majority of us are Nigerian, let's do something like this so that we will get I want to explain how this thing works, okay? The concept of buying and selling and all that. Okay, so United States dollars against Nigerian naira is quoted at 570. Is quoted 570 / 575. Please look at this. That's the quote. If at all we have it, you will see that is the quote in the market as at today or so. Now, this thing that I wrote here is exactly what is here. Okay. Now, what it means is that the first one here, the United States dollars here underlined here is the base currency, while the Nigerian naira is the quote or the counter currency. So what it means is, when we're talking about the bid and the ask price, the bid price is actually the sell price or the selling price. Is the price at which the market is prepared to buy a specific, currency pair in the forex market. So at this price, as a trader, you sell the base currency. So what it means is that when you want to, trade, the bid price is the price at which you, as a trader, you are selling. Why that is the price the market wants to buy from you. Now take note. Let's use United States dollars and Nigerian naira. So the bid price for Nigerian naira for United States NGN is 570, right? That is the price the forex market want to buy from you. Think about it. They want to buy at a lesser price, right? So the bid price is usually the smaller one. And that is the price the forex market, the market want to buy from you. And that is the price you want to sell as a trader, right? While the ask price or the offer price is the price at which the market is prepared to sell. So, you know, the market wants to sell at a higher price because when you go to the market, they want to always sell because they want to gain. Okay, so how do you make money? Now, take note, the brokers make money from this difference. Okay, they are the one that put this quote. They make money from the difference. That difference between the ask and the bid price, when you subtract the ask and the bid price, whatever you have there is what we call spread. Now, that they make money from the spread. That's why when you enter a market, the very first time you place a trade in the forex market, you always start with negative in most cases. 99% of the time, as soon as you just click sell or buy, it starts with a negative. As soon as you do that, they already made their money. As soon as you place a trade, brokers have already made their money. They don't necessarily make their money when you make losses. Yes, they do, but their money is made from your spread, okay, or from the spread. And that is why when you are trading a currency pair that has low liquidity, that is to say, it is not liquid, that is to say, it is not very much traded in the market, the spread is going to be very high because they know that they are not making money from it because not too many people are participating trading it. But the one that is very common where people are trading often, there is a lot of volume, there's a lot of liquidity, there's a lot of money stashed there is Euro USD or any currency that has United States dollars as a pair. So that one, the spread is going to be very small. Okay, for example, if you check, look at this. Let's do a little mathematics for us to see. Look at, let me look for something very, 3, 8, 9, 5, 7. Now look at this. Look at Euro PLN. This is a very funny currency pair. Look at all this one that has no dollar. Look at the spread. If we were to subtract this from this, forget it. We have 68 here. We have 793. We have 821. The difference between 821 and 793 is large. All right, is almost 20 something plus spread, almost 80. All right, but when you come, but when you come to Euro USD, you will see that this is 180, this is 44, and this is 55. The difference is 11. Can you see that? Okay, so you see the spread is lower with Euro USD or any currency that has United States dollars, and that is what you should trade, because if the spread is wide, before you make money, it will take time because you need to overcome the spread to a point of zero. Do you know what I mean? If you enter a trade and you want your bid price to surpass your ask price, it means that you must clear the 11 or the 22 or the 31. Because first, when you enter a trade where the spread is 34, it means that you're already running minus 34. So you need to be able to, your bid price must be able to overcome your ask price, which means you must be able to clear off your spread to a point of zero before you start making money. Does that make sense? Do you understand what I'm saying now? So if your spread is not cleared, oh dear, you are not making any money. That's why you have to look out for brokers that offer very, minimal spread across the different assets or different currency pair. And it is very important. When the spread is too high, definitely you're not going to make very good money. You will keep getting into losses. At the end of the day, you will think you don't know what to do. So brokers cheat forex traders via their spread sizes or their spread margin. It's very important you take note of this for those who are trading currencies, okay? So now look at this. What is the significance of United States dollars NGN? What it means is that the base currency, being the United States dollars, is worth as measured against the second currency, which is the quote currency. So in this case, United States dollars NGN, what it means is that if the rate is 570 against 575, what it means is that if you were to buy, if you were to carry out a transaction on this quote, it means that one United States dollars is worth 570. Okay, there is an invisible one here all the time. It means that $1 is worth 570. That is what this is the interpretation of this. Okay, so that is what the trading stop. But look, take note, this is just an information you need. This is just information you need to have. But beyond this, you need to know why this price will move from here to this point, or why price is going to move from here to this point. You put your money in alignment with where your market flow decision is. For example, if I say that Bitcoin is going to go from where it is to 80,000, I will not just say it sentimentally. I will say it based on what the chart is telling me. And remember, market has history. Actually, price action is a product of history because history always repeats. So how do you determine that market is going to go from this point to this other point? They are what we call key market structure or key market pattern that helps you to read, or that helps you to detect, or that helps you to determine the next flow of market. Some of these patterns are head and shoulder, flag patterns, or what we call wedge. And then we have ones we call divergences. We have what we call other flow, other block. We have what we call SMC, a smart money concept. There are a lot of them. We have what we call shapes, like we have Gartley and the rest of them. We have what we call market patterns, and there are a lot of them. So you see, that's why you need knowledge, not just to read something that is on YouTube or just watch videos. You need to follow somebody who can put you through. Beyond this point, now let me say something about pips. Hello? Now, how do you make money or how do you lose money? There are three things that are very important, very crucial. Now, number one, equity. Equity is the amount of money you fund your account with, or what we call capital. Beyond equity, you need to know what we call lot size. The amount of money you will make or the amount of money you are going to lose will be dependent on the lot size you choose. Now, what is lot size? Lot size is a transaction unit. Okay, lot size is a transaction unit of an asset, in this case of a currency pair, the transaction unit. So you want to use one lot. Now one lot is standard lot. Now we have 4 types of lot sizes. We have a standard lot, we have mini lot, we have micro lot, we have nano lot. There are some brokers that don't offer nano lots. So they start from standard lot to maybe micro lot. Okay, now one standard lot is equivalent to 10 pips. Sorry, one standard lot is equivalent to 1 pip, and 1 pip is equivalent to $10. So in simple mathematics, if, for example, look at this, 570 and 575, the difference between 575 and 570 is 5. So we can call that we have 5 pips. It means that the market has to move from 570 to 575, and that to be 5 pips. So if you buy from this price, you use one lot to buy from 570, and the market moves from 570 to 575. What it means is that you have gained 5 pips. If you use one standard lot, 1 pip is equivalent to how much? $10. So it means that if you move from 1 pip to 5 pip, it means that it is 10 times 5 is $50. So if I use one lot to buy when the price was 570, and price moves from 570 to 575, I have gained 5 pips. If I used one lot, I would have made $50. If I use 0.5, which is half of one lot, I would have made $25. So the bigger your lot size, the bigger your profit, and also your losses or your loss. So there are 3 things that is important. You need to know your equity, how much are you starting with, your lot size, the lot size to use, and then how many pips are you going to catch. So how do you make money? Lot size multiply lots multiply by pips is equivalent to money in dollars or loss in dollars. So if the pip is 10 pips and your lot size is 1 lot, it means that 1 times 10 is 10. Okay. Now, if you're using a standard lot and 1 pip is equivalent to $10, then 10 times 10 will make you $100. So lot size times pips will equate the amount of money you will make. So you see, it's important to know this. So these are some of the terms you need to learn. And for example, let's be a little bit practical here just to show you. From this point, look at this price here. I don't know if you can see this very well. That is 93.85. And then we have this one to be 91.99. If we were to find the difference between here and here, and let's assume that market is here, and we have done our analysis, and the market is going to move from 93.85. So since we have 99 as a common value, we can use 385 minus 119. That will give us 266. It means that for market to move from here to this point would have made 26.6 pips, because the last fraction or the last value is usually used as pipate. Okay, so we can call it 226.6 pips in some cases, which is 266 points. If you multiply that difference by whatever lot size you use, whatever it is will become the amount of money you would have made or lose if you did not go in the direction that was correct. So trading is pretty not very difficult. Yes, you can lose money, but like I said, you can only lose money if and only if you violate its principle. You violate the principle of having a trading plan, and then you are aggressive, you are not sensitive to risk management and all of that, then you're going to make losses. But if you stay within the confines of discipline, both in your psychology, both in the choice of asset you trade, how you trade, the lot size you use, your daily target, and then you're basically going to succeed. So like I said yesterday, you cannot learn how to trade in 2 days. So this is more like an introductory first. Now this is for what? This is for currency. Let me just quickly share another platform where you can also trade, that you don't need to understand all these, you don't need to quote currency or whatever. That is purely a synthetic market, and you can make a whole lot of money trading from that aspect. Now, remember this. If you are going to trade in this space, this particular space where you're seeing the screen, you need to understand the fundamentals. And by fundamentals, I had said, you need to know the news that is coming up about United States dollars or in the US. Some key government officials give certain market news at certain times. And each time, if they say, for example, every first Friday of the new month, we call it the NFP. NFP is non-farmers payroll. It's the news about the unemployment and the employment rates or number in the US at the time. These values or this news affects the currency flow, affects United States dollars in the market. That news is usually given around 2 p.m. or 1 p.m. or 1:45 p.m. Nigerian time, depending on the time of the month the news is coming. And during that period, you will notice that market will do a very funny movement. You can see a very long candle. We call it news. There are some news, and that's why news is divided into 3 classes. We have high impact news, we have medium impact news, we have low impact news. Low impact news don't really move. They don't really have stronger effects. But high impact news that are associated with red folder are very sensitive news. And if you are not careful to follow that news, you'll be shocked. You could just be technically, analyzing your market, and you're surprised. What is making this candle to go this taller or to move this, higher or something? And then the next thing is, you are seriously trapped. Okay, so it's important for us to understand these things. I'm trying to see if I can find. Okay, so that's it. So having talked about this, let me just share briefly another platform where you can trade, and you don't need to bother your head with fundamentals or with news. All you need to know is the technical aspect of it, the market patterns that will help you to make your speculation right. You don't need to, to be careful or to be afraid if there's going to be news by 1 a.m. or 1 p.m. or 3 p.m. or whatever. And that is a synthetic market, which in my recommendation is more profitable, is more easier to learn compared to the currency market. I've been trading currency for the past, for 3 years before I got into the synthetic market. And I still do analysis for people in this market space. but I don't really trade it that much anymore. So let's get to see what happens in this other space. Okay. Okay. All right. So we have here, this is another space. Okay. Now this is another space entirely. If you check the symbol, the bid, and the ask is different from the other one. And that's why I told us that when you're trading only currency, you are just a forex trader. But when you trade different things, whether you're trading crypto, you just trade different stuff. You're a financial market trader, because at the end of the day, if you see here, there is no dollar here, there is no pound here, but at the end of the day, you are making dollar or you're making money. So you see, it's not just about buying. So in this case, you're not necessarily buying nothing. You're just speculating the differences in prices. And for example, you can see here, these are different prices. So the speculation is, if you feel that market is going to move from this point to this point, you find out how many pips would that be? What loss size can I use? If the market truly goes that way, you've made money. Okay, so these are different, instruments or different assets you can trade. And this one is pretty simple. It is purely a technical market. You don't need to find out if there's going to be news, but like I said earlier, and so it depends on what you want. And the good thing about this particular space is that you can trade on Sundays, you can trade on Saturdays, on weekends. But when you're trading currency space, you can only trade 5 days in a week, Monday to Friday, and that will be it. And then it resumes again every Sunday night, in fact, Monday, and then that's it. But when you are trading synthetic indices, you are trading round the clock, 24/7, including Saturdays and Sunday. So this is basically where I'm going to stop for today. Like I said, there is more to this. There is more to this. There is more to this. Everything about trading, quote me anywhere, it's about understanding how to speculate the differences in prices. If the market is going to go long or it's going to go short. If your speculation is right, then you're going to make money. If your speculation is wrong, you lose money. And there are a lot of things, there are a lot of tools that you need to have. There are a lot of information you need to have to be able to help you make your speculations right. And that's why, if you're interested to go deeper into this, then you would love to have you in class. And then let's be more practical. I don't like talking theories. It's a practical thing. And that's what it is. Thank you very much, Dr. George. That's where I'm going to stop. I would like to attend to a few questions if there are any.
Before I take a few questions, thank you so much for the insight you've shared. This is quite practical. I know that when people register for the full class, you break it down for them to understand. I'm sure they will also have course to download some of these charts, download apps. They'll need to download certain apps. They'll need to download they need to get acquainted with what a broker and who a broker is. It's going to be very practical, and you can start with very little amount of money to trade and test. In fact, you didn't mention this before you even trade in the live market. What FX and financial brokers give you is a demo account, right? Tell us about the demo account, sir?
Yes. Okay, a demo account is just it's virtual money, just for practice. They don't want you to start with your real money. It's just for practice, and then just to test what you've learned, if you've been able to understand how it flows. And there's no difference. The only difference with demo and the real account is that in demo account, you cannot withdraw. Okay, but it's still the same thing, the same way it's programmed for real account. So if you get it right on demo, you get it right on real. If you get it wrong on your demo, you get it wrong on your real. So there is no difference. The only difference is that there are two differences really. One, you can't withdraw the money. And secondly, in your demo account, your emotions are not attached to it. You get it? Because even if you lose the money, it doesn't affect. You can still go ahead and refund your demo and keep. So the problem we have with people is that if they can take their demo account as serious, the way they will take their real account, they will do well. But people don't care. Since if you lose the money, it's not your money, it doesn't concern you, not lost nothing. So that's just the difference. But normally, technically, and by system arrangement, it's the same thing.
Okay, so basically, what FX does is that they give you opportunity to use a demo account to test, to try to understand market structure before you are now ready psychologically or ready to go to the live market where you put your real life money. All right, so it's
That's
very important. Tell us about the offers you're giving, sir. For those of us who are members of ecooperative.africa is giving people a special offer to learn this thing practically from the scratch. If you're here and you are interested in taking your life forward, this forex thing that has been disturbing you, you want to put your mind to it and learn it, you have an opportunity to learn at a very affordable rate. And last time I checked, Michael's ACN says that he's going to be offering at a very discounted rate for only members of eCooperative. So you have to go through us. Only members of eCooperatives can pay $100 and not at $570, but at $550. So that means that if you're doing $100, that is about 55,000 now. You pay 55,000 naira and you go through the basic knowledge, the basic simple knowledge of learning about the forex market. You can trade directly yourself without giving anybody money. And then if you're interested in doing the intermediary, maybe you already have knowledge of this forex, you want to just get to know how to not lose anymore, you want to improve yourself, you started before, you're forgotten, you want to remember, you want to move on to the next level, he's saying that you can do it at $200. That should be about 110,000 naira. And then there's also, but if you want to go through the first stage and the second stage, that is the basic class and then the intermediary class, instead of paying $300, that is for total, you're going to pay $250. So do the 250 times 550, whatever figure you get is how much you're going to be paying. And then if you want a one-on-one class for yourself, as in one-on-one, you want to do one-on-one, usually he charges $1,000 to make that happen. But for members that are in this e-cooperative, he has slashed it by half to say if you're a member and you want one-on-one training, one-on-one showing with Michael himself, putting your hand, showing you yourself, he's saying that he will take $500. That should be 275,000 naira. You learn how to do it one-on-one with him, ask him all the questions, and then you master it. All right. So those are the information that we need to pay attention to. There is nothing as powerful as learning information. A friend of mine came today to the office after class. We're doing a training, and then he said that he's learning a new skill. If you want to move your life forward to the next level, you need to learn a new skill. And in this case, a financial skill. Some of you are very theoretical. You don't know these things. And I've told you that just by stretching your mind to know these things, you'll be surprised about the opportunities that you learn. A few months ago, I had no understanding about Forex. I thought it was a very complex thing. But we worked together with Mike, started to study, started to listen, started to learn, started to pay attention to charts, started to do it myself on the demo. And before 1 week, 2 weeks, 3 weeks, I started getting acquainted with all of this. So if I can do it, you can do it. It doesn't matter. Forget the technical terms. By the time you play in that market once or twice or thrice, you'll be shocked at how interesting, how exciting that space is. And you can start making money in your family. One of the ways to multiply your results is to engage in certain businesses. Like he said, the financial market is the largest, the forex market, not as the forex market, is the largest financial market in the world. And people are playing on it. Big people are playing on it every day. So it's important that you pay attention to it. I was surprised when a certain man of God by the name Apostle Selman, he mentioned it at one point. Look, guys, you guys should go and learn something about the forex market. Yes, you can lose your money if you're greedy, if you don't know what you're doing, but you can also gain a whole lot. And the philosophy of Michael is simple: target-based training, target-based trading. Have a market plan. Don't be greedy. Don't be impatient. Be patient with your teacher. Be patient with the teaching process. Work on the plan. Stay with your trading. Even if it's $5, $10 you're making daily, just work with that until you build your confidence, until you can make more money, and you are good. And I tell you, that can be an extra income for you. So if you are interested in learning this thing and you want to be part of it, this offer will last until the 3rd of October. By the 3rd of October, the prices will return back to its original price. There'll be no offer anymore. By the 3rd of October, whatever it was $100 will become $200. Whatever was $200 will become $400. Whatever was $500 will become $1,000. That is the standard price. But for being a member of eCooperative, then you can get this opportunity. So if you're not a member of eCooperative, you can also not enjoy this benefit. If you reach out to him personally, he won't give you the benefit of that. So I want to encourage you to make effort to reach out to us and see how to be a member of eCooperative is very simple. Go to www.ecooperative.africa/promo. www.ecooperative.africa/promo, and all the information that you need is also present there. You can go to ecooperative.africa and you can look up for the plan, how to be a member, how to register, and you're good. If somebody invited you to be part of this training, just reach out to him. How do I register? She'll send you a link and then you get started. There are videos on YouTube that you can read and help you to get started. Tomorrow, we're going to be talking something very more exciting. We'll leave money a little bit and talk about a bit of savings. Kingsley here? Kingsley, are you here? Kingsley, or has he left? Okay. Kingsley Ime will be talking to us about money, but at another different angle, how we can save, how we can start budgeting, what we can do, how we can save our money, and then we'll learn a whole lot that will help us. I want to thank you guys for showing up today and being part of this very, very interesting. I'm telling you, this is a very exciting meeting. So if you are interested in this, you can chat with Michael. Michael, you want to give them your WhatsApp number for them to chat with you? Michael, you want to place
Okay,
put on the chat,
okay.
just put it there. Anyone who is interested will go there and get all the details of what they can do and how they can get that money, how they can be part of it. So that is that for now. One more question, one more. I don't know, somebody has to say something. Somebody wants to say something. You want to say something? This is a time to say it. You want to say something? This is a time to say about it, what you've learned today. Let me see if I can get you those details. Okay, I have gotten you the details. Let me put that in the comment section. Yes, somebody's okay. He has put his number out there for you. And then let me put you the details of the pricing. You have till third, and that's the details of the pricing there, and that's the account number to make payments to. Okay, for me, please. Polaris. All right, so please take advantage of the opportunities last till October. This is 28th. You have a few days to plan your budget, plan your time, reach out to him, get to know this thing. He's going to break it down. What he's trying to show us in 2 days is what will take him actually 2 weeks to 1 month to show us. He'll break it down for you step by step, and you have the opportunity to ask him all kinds of questions, and you can start trading almost in 2 weeks' time. You can trade with your $50, you can trade with your $20, $30, you can trade with your $100, you can trade with your $1,000, and through the guidance of a teacher, you will not be blowing your money, you'll be preserving your resources. And this is why eCooperative is very valuable. So focused on learning. I believe that if you learn first, you earn later. All right, so thank you guys for being part of this class. Thank you for participating. Thank you for joining. Tomorrow will be another very exciting time. Like I said, the next 30 days or the next 27 days is exciting. We have people like Adiolu Akiemi, a multi-billionaire. He will be sharing his ideas about finance, about selling. He'll be joining us and showing us things. He's a part of eCooperative and he'll be here to tell us. We have people like